For years, trying to buy a new Rolex from a dealer was a masterclass in frustration. You'd walk in, see a case full of watches you couldn't buy, and get told the wait for a simple Submariner was 5, maybe 10 years. But that era is over. The legendary waitlists have vanished almost overnight. In this video, I'm going to break down exactly why that bubble burst, how Rolex itself engineered the crash, and what it means for you if you actually want to buy one of their watches today. If you appreciate getting the straight story on the luxury world, subscribe, like this video, and hit the notification bell so you don't miss what's coming next. Let's be clear about what the Rolex waitlist really was. It was never a fair, first-come, first-served line. The reality is that dealers kept a discretionary interest list. Your spot wasn't based on when you asked, it was based on how much you were worth to the dealership. The entire process was an opaque, relationship-based system. To get a desirable watch, you had to play a game. And the number one rule was purchase history. You wanted a steel Daytona? Forget it, unless you had a documented history of spending anywhere from 40,000 to over 100,000 euros. And that spending wasn't just on other Rolexes. Dealers perfected a practice called bundling. They would implicitly require you to buy less desirable, higher-margin items, jewelry or watches from other brands, just for the chance to be allocated the Rolex you actually wanted. The Rolex itself became leverage. It was a reward used to move their entire inventory of other products. The business model wasn't selling Rolexes. It was using the promise of a Rolex to drive overall store revenue. This whole system was propped up by a massive speculative bubble that peaked between 2020 and 2022. A perfect storm of government stimulus money, soaring stock and crypto markets, and a lack of spending on travel created a surge of disposable income. Suddenly, a Rolex wasn't just a watch. It was seen as an alternative asset class, a hedge against inflation. This attracted a new kind of buyer, the speculator or flipper, who cared nothing for watchmaking and everything about the arbitrage between the retail price and the insane secondary market value. And the numbers were staggering. The average secondary market price for a Rolex exploded, surging 93% in less than 2 years. The mania was real. A stainless steel Daytona retailing for around $16,000 was trading for as much as $54,000 at its peak. A Submariner Date with a retail price under $10,000 was hitting nearly $19,000. This created a vicious cycle. The higher the grey market prices went, the more flippers jumped in, which made the watches harder to get at retail, pushing secondary prices even higher. But that party had to end. Starting in mid-2022, the bubble didn't just leak, it burst. The macroeconomic storm reversed. Global inflation led to aggressive interest rate hikes. The crypto and tech stock markets that had created so much paper wealth experienced a dramatic crash. That free money effect evaporated, and aspirational luxury spending was one of the first things to go. As a direct result, secondary market prices for Rolexes plummeted. The average price fell by 31% from its peak by the end of 2022. The massive profit incentive that attracted the speculators was gone. And just like that, the flippers moved on, and a huge portion of the demand at authorized dealers vanished overnight. The buyers who were flushed out of the system weren't true enthusiasts. They were transient, profit-seeking tourists. While the market was correcting itself, Rolex was not standing by idly. The brand launched a decisive three-pronged counteroffensive to reassert control. First, they signaled a long-term plan to boost supply, announcing a massive $1 billion investment in a new production facility in Switzerland, set to open in 2029. Second, and more strategically, Rolex launched its official certified pre-owned program in late 2022. This was a masterstroke. It allows their dealers to sell authenticated, serviced and guaranteed used watches. This does two things. It allows Rolex to officially capture profits from the lucrative secondary market for the first time, and it establishes an official upper bound for pre-owned values, squeezing the profit margins of independent grey market dealers. Third, Rolex continued its strategy of annual retail price increases. Every time the official retail price goes up, the gap between it and the secondary market price narrows. This systematically reduces the potential profit for flippers, making speculation a much less attractive game. So what is the new reality of buying a Rolex in 2025? The wait times are genuinely measurably shorter. A joint study confirmed it. The median wait time for a Submariner dropped from 105 days to just 60. For a GMT Master 2, it fell from 180 days to 90. The Explorer saw the biggest change, with waits falling by nearly 66% to a median of only 31 days. Anecdotes now support this data. Reports of customers walking in and buying a Datejust on the spot are common, but it's crucial to understand this newfound accessibility does not apply to the entire catalogue. The top-tier trophy watches, the stainless steel Daytona, the GMT Master Pepsi, and other special pieces remain incredibly difficult to acquire. These are still reserved for the dealer's top VIP clients with consistent six-figure spending histories. For these watches, the waitlist hasn't vanished. Its true nature has just been clarified. It's not a list you can join with patience, it is a barrier of expenditure you must overcome. Let's recap. The waitlist was never a real list. It was a pay-to-play system. The crypto-fueled market bubble burst, chasing away the speculators who created artificial demand. And finally, Rolex itself stepped in to regulate the market, protect its brand, and ensure a bubble of that magnitude can't happen again. The market has bifurcated. Core models are now accessible, while the highest echelon of Rolex remains as exclusive as ever. As always, this information is for perspective, not financial advice. Now that models like the Submariner are becoming more accessible to dedicated enthusiasts, does that make them less desirable? Let me know your take in the comments.